You know, if I'm going to do a sensationalized title like the scariest chart in all of crypto, I feel that it is necessary to just let's skip the introductions and let me tell you what I believe is the scariest chart in all of crypto. It is this right here on my screen. And so, what am I looking at here? I am looking at an intersection of three key points, one being Bitcoin's price, and then the other being this, forgive me if I'm getting this color wrong, purple-ish line right here, and the other one being the orange line. So, what are these two lines? They're moving averages. And they are two specific moving averages, the 50-week moving average, the orange line that is descending like crazy, and then the 200-week moving average, which is the purple line. And again, forgive me if I'm wrong about that color, but the purple line that is steadily ascending. And so we have this point where three forces are about to interact, and we don't have a precedent for this in Bitcoin's history. And what do I mean by that? Well, I mean, we have spent the last 6 months under the 200-week simple moving average. That has never happened in Bitcoin's history. And I've explained, yeah, that is because we are in the first true bear market in Bitcoin's history where economically we're not in an up-only environment anymore. So, of course, yeah, we're going to spend some time under the 200-week simple moving average. And since we have never spent a solid chunk of time under the 200-week simple moving average, we have never needed to have the 50-week simple moving average intersect with the 200-week. And so I don't know what's next, but I want to point out historically what happens when these moving averages converge, which isn't often. But all right, we don't have a precedent for that with Bitcoin. This has never happened, and so we are in uncharted territory. But we can take a look at the S&P 500 and we can see, what would I call this? I mean, we could maybe call this a mega death cross because of how rarely it happens. You know, death crosses happen all the time. The 50-day and the 200-day moving averages, they cross all the time. And, you know, it can be a death cross or a golden cross. But as far as the weekly moving averages are concerned, this is extremely, extremely rare. And so we see here two times in the last 20, 30 years that this has happened. So the 50-week crossed over the 200-week in the S&P on August 1st of 2001. And then what happened after that? Well, the S&P 500 continued its descent. Now, obviously, it had already started descending, but it continued its descent until it bottomed out, did a double bottom, second bottom in February of 2003. And then again, obviously, the 2008 financial crisis would be the next time, and we had a mega death cross. I've never heard anyone call it that, but I'm going to call it that. We had this death cross in 2008, and that on the day of the death cross, or on the month of the death cross, whatever you want to call it, October of 2008, we still had some time to go. Now, this death cross didn't last nearly as long as the dot-com bubble death cross. It was just a few months of misery, but there was some misery. And so what's the significance of this? You know, I do believe that we are in the middle, the early stages of a bear market rally with Bitcoin potentially going up to $30,000 to $42,000. But I am weighing out everything. I'm holding all of my opinions to be open-handed. And I'm seeing something like this, and I'm just like, all right, I'm going to pause. I'm going to wait and see, because how soon will this be happening? This is a matter of weeks. It's a matter of days and weeks, not months. A month from now, this cross will have happened. And so what happens after that? And more particularly, what are traders going to do? How are traders going to use this? Because they're always looking for opportunities to make money to the upside and to the downside. And it is my opinion, short term, maybe a month, maybe, I don't know, after or from the point of this cross, that there may be some short-term pain. But at the same time, there's a lot of other factors that I'm looking at, including, you know, big things being just the fact that the Fed is getting less aggressive with raising rates and they are moving more towards easing. But you've got to weigh these things out. And I think, I don't want to be too bearish here because I am right now a bull, but I think I am going to open some shorts around this time. And that's fine. Again, I've been saying, as far as this bear market rally is concerned, the one that we're in right now, that this is a matter of months. That it could take 6 months to play itself out. And so I would think, what's the worst case scenario for this? The worst case scenario is we could see new lows. We certainly can. I'm not going to sugarcoat anything. We could see new lows after this happens. Best case scenario is that this is just a non-event, that the worst has already happened, because we got hit pretty hard in 2022. Well, best case scenario, this is an event. I will say that, and traders will use it to their benefit. But it could be one of those things where we go back to that CME futures gap at 19.5. We go back to the bull market support band. We hold that as support, and then we move higher. Or maybe we don't even go that far down. I would say that is in the realm of best case scenario. But January has been a phenomenal month, and right now, or soon, maybe we'll get up to 25,000. Who knows? I think that there'll be time that for us to just take a breather, to pause, and then we'll move on. And then we'll move on from this. So other things to look at. It's funny, when I was preparing this video, I saw this tweet from somebody I follow on Twitter, Game of Trades. He just is a treasure trove of data. And he pointed out, hey, we have a golden cross coming. So 50-day moving average is set to move above the 200-day moving average. And historically, that has been good. We have death cross here, golden cross, which there was a fake out in 2019, late 2019. Actually, that was 2020. And then a golden cross, and that golden cross was phenomenal. This golden cross here was phenomenal, and that was right in the middle of the bear market rally of 2019. There's a mixed history of death crosses and golden crosses really having any significance, but it is of some significance that, we are about to see a golden cross. Sounds good. There's history here. And so what do you, I want to hear your thoughts on this. I don't think this is a non-event, but what's the precedent for Bitcoin? There is no precedent. But there's a lot of things that I'm paying attention to, especially this week. And so I know this is relatively a short video, that I tend to make videos about 20 to 25 minutes long, at least since I started back up in the new year. But there's a lot of things going on this week, and so I just want to point those out. So Tuesday, taking a look at there's lots of little things, but the big one here, the consumer confidence index. So let's say that we are seeing signs of rising consumer confidence. Think through the Fed in their perspective in that they want to see signs of a recovering economy. And so that would slow them down when it comes to lowering rates. So in that case, if we're just looking at the price of Bitcoin and other cryptos and nothing else, that is bad news. Rising consumer confidence is in general a good thing, but that would be bad news if we heard good news for that. Other than that, moving on, S&P manufacturing PMI. Always want to look at anything inflation related for sure. Fed Chair Jerome Powell is speaking Wednesday at 2:30. And my assumption is that he is not going to give any hints that the Fed is going to pause, and very much not going to give any hints that they're going to pivot. I haven't checked the CME Fed Watch lately, but last I checked, it was like a 99% chance that in the next Fed meeting, they were going to raise it by 25 basis points. I don't see any reason why they would deviate from that. We have jobless claims on Thursday. And let's see, and then non-farm payrolls on Friday, and the unemployment rate. So this is a big week for economic reports coming out, and I think that the market is responding just appropriately. Some people are like, big week, we're going to take some money off the table. But by no means would I say that I am yet a bear, very short-term bear. I think we do have a battle, $24,500 or $25,000 for Bitcoin. And I think if I'm adjusting anything, it's my impression that, again, short term, I think with this in mind, that the Bears are going to win this short term battle. So I'd be very cautious about entering longs right now, especially if you were to see Bitcoin get up to mid 24 to 25 range. I would say stay far away. But that is all I have for today. I would love to hear your thoughts in the comment section. Does this mega death cross, the scariest chart in all of crypto, hold any weight to you? Or do you think it's just, we never had it before, so it's going to be a non-event? I'd love to hear your thoughts. But otherwise, and if you like this content, smash up that like button, all that stuff, subscribe to the channel. But otherwise, I will see you in another video. Peace.